Dividend investment, a simple guide to passive income and financial freedom with dividend stocks. Retire early with smart stock investing and start making money online. Written by Nolan. Narrated by Derik Hendrickson.
Introduction. What are dividends? Admittedly, most readers will certainly have heard about the term dividends before. For readers who cannot finally define what dividends are, I would like to explain the term in detail. Dividends are direct payments by a stock corporation, i.e., a listed company, to their shareholders. The dividends are part of the profit that the company was able to generate in the previous year. The phrasing, amount to be distributed, which can be seen as a synonym for the term dividends, is also very commonly used. The dividend payment of a stock corporation is or will be determined at the annual general meeting, which must be held once a year by every company. The board of management of the company makes a dividend proposal, which must then be approved by the members of the annual general meeting by the majority. The dividend is generally distributed one day after the annual general meeting. Dividend investing is most definitely a lucrative way to make money. It does take some work, and you will need to have a relatively high investment in the beginning to make sure that you are getting the most out of the return, but you will not need to worry about the problems that come along with managing an investment. It is more of a set and forget type of investment and something that you can forget about when you are waiting to get the return. As long as you have your preferences selected for the money to go into your bank account, the company will automatically put it there when they go through each period to make sure that they are giving their investors the money back that they wanted. It is a great opportunity for people who want to be able to invest, but who simply don't have the time to invest. One thing that is worth mentioning, though, is that it can take some time to really start seeing great returns. It will likely take at least a year to see a good return on the investment, but once the company starts paying out their investors, they will always be able to do that amount and more. You can be prepared to see your dividend payments rise regularly. Chapter 1. Dividend Terminology. Since investment is a complex science, there is a whole stratum of terminology that is specific to the day-to-day discussion. Here are some of the most common terms used. Cash dividend. A cash payment made against the number of shares held in common or preferred stock. The exact amount paid is determined by the payout and the investor's holdings. The payout can be made for a number of reasons, the most common being current earnings or accumulated profit. The payout frequency varies per company. Declaration date. The date of a dividend payout is announced or declared by a company's board of directors. Dividend. The amount of distributed wealth that a company will assign for distribution amongst its shareholders. The value of the dividend divided by the number of shares determines the value per share each investor will receive. Dividend cover ratio. This is the ratio between a company declared net dividend payout and the actual reported earnings. This ratio will show whether a company has sufficient funds to finance the payout. The actual calculation is earnings per share, EPS, divided by the dividend value per share, DPS. Dividend Reinvestment Plan, DRIP. A DRIP is an opportunity for an investor to convert their cash dividend into a share dividend of equal value. This gives the company higher liquidity in both cash and shares and enables investors to increase their holdings without paying taxes. Dividend yield. The dividend yield is the method used to calculate the relation between a dividend payment and its share price. Ex-dividend date. The ex-dividend date is the date that the stock trades without a dividend. This means
Sample complete. Ready to continue?